Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, September 18th, 2016. Hope you guys are having a fantastic weekend and let's get started. So, this is the weekly chart and I'm just really recapping on what I was saying. This is not a trading, look, because I don't know when these are coming. It may be starting, may have started with this drop here, or they're going to carry this on into 2017. What it's really showing you is that we have enough wave counts here on the daily chart as well as bearish divergences to say that we do have a wave 2 that's coming down, that's pending, that most likely will take the S&P down to the 1608 and even as far down as 990, and it would still be a bullish wave count, because when this comes down, this will make the wave 2, and then we have a wave 3 that's going to be stronger than this. So it's one of those things that I'm just showing you. I don't, you don't make trades off of this type of chart because you just don't know exactly when this wave 2 is coming. So just wanted to recap that. You can see on the momentum, it's pretty much pegged up here again. So it's pretty overbought. We have again, we have the bearish divergences in place, and if we look at the daily chart, here again, we have bearish divergences in place. We're about neutral right now with the MACD. And this is a bearish rising wedge right now. Now, this would suggest that we have a move to coming down to the anywhere between the 2002 or even down to the base, which would be the 1956. So that's what this pattern is looking for. Now, you can see that it's not in play yet because we haven't broke through this trend line, the lower rising wedge line. So once it breaks through this is right at support as well, and if it breaks through it, that's when we're going to get a pretty fast reaction trade that's probably going to take the S&P down to the 2050 level. And if it doesn't hold this, that's when I would anticipate that we're coming down to reach these targets. But the first thing the bears have to do is push it through this support and break this wedge right here. And but the only thing with that is, if it does break, most likely we're going to, unless it's a really, really hard break to the downside, we're probably going to get some bullish divergences. So I'm going to stick with, I don't think it's safe to be buying or shorting aggressively right now, because we're in really the gray area where I can, give you reasons why I believe we're coming up to the 2172, but I can also give you reasons to say that we're coming down to the 2068. So it's, being that we don't have any buy signals and we're just coming off of a sell signal and we had this big drop, we're kind of in that no man's land. And that's why, I've been saying it's, I'm still kind of bearish on the market overall, but it's not something that you really want to make, big trades, because if you get short here and it goes up to the 2171 or closes this gap here at 2178, you're probably not going to stay short, because it's a pretty long ways away to run on the short side. But you don't want to buy the market, because if it does start taking out these support levels, remember, we have a bearish rising wedge here, so that's looking lower. Once it breaks this, the next support area is going to be right around this 2068, and if they lose that, then they may come and start closing some of these gaps. So that's why, like I said, just keep kind of a neutral view to the market for right now, and really what we want to do is see which way it breaks, and then from there try to adjust and see, if it moves up, then we're going to start looking for bearish divergences. If it moves down, then, you want to keep an eye on some bullish divergences, but you really want to look at the support levels. So Also, this is a pattern that's in play right here, and this is that expanding top or megaphone top or reverse symmetrical triangle, whatever you want to call it. But this is looking for a move to come all the way down to the bottom of this, this downtrending line right here, which brings it around the 1900 level. Now, again, not sure when or if that is happening. This is just a pattern, and that's what it's looking for. If we take a look at the 15-minute chart, here is a descending triangle. Again, it's another bearish pattern. This has a target of 2073, and if we go back to the 60-minute chart here, 2073 is pretty close to the 62% retracement, so it probably would come down to this, the 2068, or it's pretty much right at support too. So maybe that is going to be the number, but this pattern is looking for the S&P to head down to the 2078 level. Now, another reason why maybe just staying on hold right now is we don't even have any bearish divergences on the 15-minute chart. You can see this move right here. Actually, there might be a little bit up here. I can't really see it. Okay, there might be. I'm not 100% sure, but it's still not your extreme bearish divergences like we saw here or some of the other ones. But if it breaks through to the upside, what's going to probably happen is they're going to come up and try to close this gap at the 2156 level. If they head down, then most likely they're going to kind of gap it through this support and make their way down to the 2073 level. But you can see we're neutral right now, and they haven't broke this support level, so you can't get aggressive on on the short side, just because if they decide that they're going up, then it's going to, there could be another 40 points to the upside, 30 or 40 points to the upside, and that's not really too much fun being short. So the short term, like say on Monday, what the bears have to do is push it through this 2130. Most likely they would come down and test this 2118. The bulls need to really get it above this moving average right here, and that's at the 2147. If they do that, then we start anticipating that they are going to close the gap at the 2156. And remember, they still have this gap open up here, right around that 2178. So if they, if the bulls can get it through this, then you start anticipating that we're coming up here. But the, really, it's the once it breaks through this moving average, you have, this area right here is resistance, and then back up here. So, that's pretty much what the bulls and the bears have to look at for tomorrow. Like I said, I don't really have that strong of opinion on who is going to win that battle. I'm more just going to accept it either way and not really care who wins. If it goes up, then I'm going to wait for some areas up here to look short. If it goes down, then, I'm just going to maybe I'll jump on a little bit when we break through this support level and for one, but it has to be pretty quick. And if we break down, then most likely there's a chance that we may be looking for the rally after that. We don't really have any bullish divergences in place, so it doesn't have me really interested in looking to buy right now, because we haven't really had a panic low, even though this move right here was panic, but they rallied it right back up again, so it wasn't that much overall. If we take a look at the 5-minute chart, this is just giving us some targets from this low to this high, and you can see they're hanging right around the 68% retracement level. So they're trying to build some support at this 2130. Again, if they break that, then we're coming. It should be a really, really fast move down to this to the 2118, 2119 area. And being that this little rally here, I mean, it's only 5 minutes, so it's not that big a deal. But in any way, where it's getting a little bit overbought right here, so we could get some kind of pullback. Really, the last line in the sand for the bulls would be the 2126 before it's just a quick move down to here. And again, if the bulls can push it through to 2141, then they're probably coming up to the 2151 or possibly even closing this gap. So with that, like I said, just keep a neutral bias right now, because it's really, there is no clear advantage for either side to be really concrete on the next direction. Even though the bigger picture, I do believe it's going to be down. The short-term stuff is what has me a little bit not sure, and that's why I'm just keeping a neutral bias for right now. So with that, enjoy the rest of your weekend, and I'll talk to you guys tomorrow.